Hey, what's up, my friends? So, in this week's market analysis, I'll walk you through three trades that I took, right? I'll talk about the thought process behind my trades, right? Where I enter, where I exit, where's my stop loss, how I manage the trade from start to finish, right? So, everything, right? I'll break it down step by step so you kind of understand, right? How exactly I trade the markets. And towards the end, I'll share with you the trading setup that I'm looking at this week. There are a number of trading setup, but I find that this is the best one that is about to happen this week, and I want to share them with you in today's video as well. So all this and more in today's market analysis. I'll see you there. Okay, so the first trade that I want to talk about is this dollar against the Chinese yuan. So this is the daily time frame, and you can see that clearly this market is in a downtrend. Right? If you are not sure, just pull out your 200 period moving average, and you can see that the market has been below the 200 MA for quite a while. I think since last year, right, where it finally over here last year July been below the 200 MA, and your bias should be towards the short side. So as you can see, right, if you are consistently remaining short because the price is below the 200 MA, right, it would pay for you. But if you're looking to long, then it can be difficult, right? Because I think the largest rally is this portion over here, and subsequent rallies are all pretty much short-lived, right? So this is an example of how the 200 period moving average will keep you on the right side of the market more often than not. So anyway, clearly you can see that this market is below the 200 period moving average, so my bias is to go short. So the next question I have to ask myself is, what is the trading setup that I'm looking for? Right? So for those of you who have been following me for a while now, you know that setup that I do trade is what I call the false break, where you can see that the market, this portion over here, rallied into this area of resistance, right? And then smash lower and close below this area of resistance, right? This candle, this bearish candle over here. So I went short, had my stop loss, right, a buffer above this highs, right, somewhere over here, because I don't want to put my stop loss just above the highs, because things like this could happen, right? Notice this, let me zoom in. Notice this type of price action where the market just trades higher, swipe, or rather swing above the highs. Traders who have their stop loss just above this highs would have gotten stopped out, right? And they missed this remaining move towards the downside. So this is the reason why I don't set my stop loss above the highs. So anyway, right, my stop loss is somewhere about here to give it some buffer. And from the looks of it, right, my take is that the moment this market breaks and close above the previous day high, I would, exit half of my position. I'll explain later why I want to exit half my position, right? But that's the take for the first half of the position. If the market breaks and close above the previous day high, I'll exit half my position, because I have no idea whether there's momentum up higher, right? Could be a retracement, right? And then it's continue to swing up higher. So this is, for me, is like a more aggressive approach in trailing the first half of the position, right? In case the market, could be a start of a new trend. I want to, build up half my position if the market breaks and close above the previous day high. But as you can see, right, it didn't happen, right? The market, this portion over here, did not break and close above the previous day high. So my full position is still on, right, until the market can break and close. Let's say it breaks and close above this previous day high. I'll exit half the position. Now, why do I want to exit half, right? Usually I would exit all my position, right, for this particular setup. But the reason why I decided to go with half only is because if you look at the weekly time frame, what do you see? Well, notice that this is actually a head and shoulders pattern. The market broke the neckline, right? It's traded down lower, and at this point in time, it's looking to form somewhat of a trend continuation pattern, right? The market, the volatility of the market, right? It's somewhat shrinking, right? And it's looking like a potential bear flag pattern that's forming, right? Potentially, we have no idea whether the market will break out higher or not. But from the looks of it, right, the buying pressure doesn't look very strong, right? Because if you look at this range over here, right, the range of the candles are not as large as this portion over here, or like this one over here. So it's pretty much contained, right? So this to me is a signal that the market, right, could possibly still continue to trade lower. So I want to keep the remaining half of the position on to see if the market can break below these lows, right, and continue trading lower from here. So that is why I have decided to keep half the position, right, remaining for this particular trade setup. Okay, so there are definitely reasons to why I do certain actions, right? So this is why I would say trading is very hard to make it into I mean, for discretionary trading, right, it's quite difficult to make it 100% rule based, because there is always other factors that could affect your trading decisions, right? I mean, we're not talking about systematic trading, right? So for discretionary trading, you always have to understand what are the additional factors that you look at that could sway or adjust your existing trading decisions. Okay, so this is one of them, right, for the dollar against the Chinese yuan. So we'll see how this one plays out in the coming week. Moving on, right, another trade that I want to share, it's the dollar against the Mexican. Let's see, dollar Mexican, all right? So this is a losing trade, right? I'm not afraid to share. So you can see over here for this particular trade setup. Okay, so initially I didn't have this level drawn here. I was somewhere about here, right? Somewhere about here, because the area of support, market break support, retest support, right? And it break lower. So to me, right, this was actually a trend continuation trade. Again, similar, you have this head and shoulders pattern, market break below this area of support, and this to me, right, is the first pullback after the market breakdown. So I was expecting the market to continue trading lower. After all, right, the market just break a key support, right, and I thought, hey, right, there's a good chance that the trend could continue. So again, I had my stop loss, right, just above this highs, right, give it some buffer, was about here, and I was looking to see how far this trade could run, and pretty much went against me, and I got stopped out of this trade. Okay, so because this new swing low was made, right, I pretty much adjust my SR levels down lower. Over here, as you can see now, it has, one touch, 2, 3, and 4 over here. It's quite significant. So I got stopped out of this trade, and to be honest, right, this is pretty much part and parcel of trading. So one thing that I could have, be aware of, right, but on hindsight, right, it looks obvious, but when I was trading this live, it wasn't, right, is that since this is a previous resistance that could act as support, right, I could have, bailed out my trade, right, when the market closed strongly against me, but I did, right, so instead it hit my full 1R stop loss, right? So this is what I could have done, but looking on hindsight, I may not actually, draw this level out, right, until they actually reverse strongly from it, right? So again, right, I may or may not have avoided this losing trade, but again, just something to share my thoughts with you. So, and one last trade that I want to share with is New Zealand yen. Okay, this is a trade that happened to go in my favor, and it's again using multiple time frames, but it's not difficult really. I'll just explain. So looking at the daily time frame, right, you can see that this market came into this area of a resistance, right? Previous support, turn resistance, and turn resistance. And for those of you who trade the false break setup, right, this is actually one possible setup that you could have traded, right, and just have your stops, right, a distance away from this highs, because you don't want the market to swing up higher and then swing lower from there, and you get stopped out before the market could move in your favor. So anyway, but this wasn't the setup I traded, right? In fact, what I traded was on the 4-hour time frame. It looks something like this. Okay, so you can see that this market, pretty much, right, on this 4-hour time frame, it looks like an uptrend, right? With this range, market made a series of higher highs and higher lows. And the first clue to tell me that this trend on this time frame could possibly end is, again, very simple, using structure of the markets. In an uptrend, you have a series of higher lows and higher highs. So at this point in time, right, this is this swing low. This is the first break of structure I noticed, right? It actually made a lower low. So this to me was a sign that the market could possibly reverse from here, because on top of it, if you recall, this was actually an area of resistance on the daily time frame, right? And this was the first break of structure against this uptrend. So to me, this is a sign that the market could reverse lower, right? On top of it, if you look at the price action, you look at the candles, right? They're not really very bullish, right? Pretty much contained, not say very hugely big like this portion over here. So the candles are not very large. So that's always a good thing. And when the market break and close below this swing low, I went short. Okay, again, stop loss, right? Just reference it from this swing low. Give it some buffer, and you're somewhere about here. Okay, and in this case, right, I was actually trailing my stop loss on the daily time frame. Okay, my trailing stop loss technique is nothing complicating. I'm just trailing it on the previous day high. So we can see that throughout this entire move, the market has not break and close above the previous day high all the way, right? Even for this candle over here, let me just remove the lines. this candle over here, it did not break and close above the previous day high. Okay, so this is a very useful technique if you want to trail your stop loss, all right, to just ride one swing in the markets. Of course, you can use techniques like moving average and stuff like that, right? But this is something that I find that is useful for me, it works for me, and it's something that I incorporate in my own trading. So this New Zealand yen trade I'm still in, but the moment it breaks and closes above the previous day high, I'll exit the trade. And one thing to bear in mind is right now we are at this area of support as well. So again, whether this area of support will hold or break, right? It's anyone's guess, right? So since I'm already in the money, right, I'm just going to trail it as my plan for this New Zealand yen trade. Okay, and those are the 3 trades that I took recently. There are more, but of course, if I want to talk all of it, right, it pretty much would take more than an hour or so. So to end off this week's video, I just want to share with you a potential trading setup, right, that I think it's worth looking at. So this is the pound dollar. Okay, and you can see that this market has been, in a very nice long-term uptrend, a series of higher lows and higher highs, right? Higher lows and higher highs. And recently, right, what happened is that the price action of the market is starting to show signs of crack. You notice this area of support, market has break below it. This previous resistance that could act as support, market is below it. How about the 200 MA that I always, mention about? The market is below the 200 period moving average, right? So this tells me that right now, my bias should be towards the short side, okay? And the setup that I really like is that notice this, volatility contraction. Okay, volatility contraction. This, for those of you who do not know, right, is that volatility in the markets are always changing. They are never static, right? If you just look at Bitcoin, for example, right, I think a few months back, right, where it reached almost 20,000, volatility is huge, right? You can see that the range of the bar is getting larger and larger. And if you look at the Bitcoin chart right now, you know what? Let me just get out the Bitcoin chart to illustrate what I'm talking about. So this is the chart of Bitcoin, right? Daily time frame. Look at this. Huge volatility, right? Volatility has spiked, right? You pull out your ATR indicator, it's going to be at high levels. But prior to this, right, if you look back, right, maybe a year back or so, volatility has been pretty much quiet, right? Then it started to get wild over here. Crazy wild swings. And right now, what's happening? Well, volatility seems to be shrinking once again, right? You can see that the range of the candles are relatively small. So this is the concept that I'm trying to bring across, is that volatility is always changing. So similar for the pound dollar, right? You can see that volatility is huge, right? Swing up, swing down, and it gets tighter over here. Similar for this one over here, tight volatility, swing up, tight volatility, swing up, right? Volatility is tight over here, then you have a huge spike in volatility, right? So this happens consistently over time. It's like the effect of the market, right? I don't really have a fixed reason to it, right? There are numerous reasons for it, but just know that, volatility, right, swings from a period of low volatility to high volatility, right? It's like electric, right? You on the switch, the light is going to turn on. You don't ask yourself, hey, how did that light turn on, right? What is the process behind it? Is it because of some resistor, some ohms or whatever, right? So just know that volatility, right, changes from a period of low volatility to high volatility, right? So right now, the pound dollar, clearly you can see that volatility has shrunk, right? Just look at the range of the candles. It's quite obvious. Okay, so since the market is now below the 200 MA, below the area of support, right, my bias is to go short. So if the market can break below this swing low, I'll be looking to short the pound dollar. Again, my stop loss is always a buffer above the swing highs, somewhere here, okay? And to see how low, right, this market can go. I know there's area of support here, here, and here. I even draw it on myself. But does it mean that the market would definitely reverse at this area? Nope. Right? No one knows. So this is why I'm going to take a trailing stop approach, all right? Just go down to the weekly time frame. And you can see that, over the last 3-4 weeks, the market has not break and close above the previous week high. So I'm just going to use this simple technique, right, to trail my stop loss and see how far this market can go. If you don't want to use this technique, right, another approach you can use is, let's say, the 20 period moving average, right? If the market breaks and close above it, you can exit your trade, right? So there are numerous ways, right, to trail your stop loss, right, in the markets. Okay, so with that said, I have come to the end of this week's market analysis, right? So just a quick recap. I talked about 3 trades I took this week, right? Dollar against the Chinese yuan. Okay, I talked about the loss on Mexican I had, and the trade that's still running on the New Zealand yen. I think it's yeah, okay. So And last but not least, we talk about this pound dollar setup, this volatility contraction that it's happening, and possibly you could get a breakdown towards the downside. Okay, so with that said, right, I hope you have enjoyed this week's market analysis. Because if you do, you can go down to my website over here, tradingwithrayner.com, right? Just scroll down a little and you can, download this free trading guide over here, the ultimate guide to trend following, right? This will be useful since we talk about trailing stop loss in this week's video, as well as the ultimate guide to price action trading, right? Where you learn how to better time your entries and exits. These two guides are completely free, right? And it definitely would give you a strong foundation to my own trading methodology, right? So go to my website, tradingwithrayner.com. The link over here, right? I'll put the link below as well. Download these two trading guides and you will get started on the right track. Okay, so with that said, I have come to the end of this week's video. Any feedback, comment, just let me know below. And if any questions, you can feel free to ask away. And if you've enjoyed this video, please hit the like button, right? Because I would really, really appreciate it. Okay, so with that said, I'll talk to you soon.